Hey everyone, it's Kirk here again at Option Alpha. So this morning I got assigned on two different positions inside my tastytrade account. So what I wanted to do in this video is walk through the entire process of how you can manage your assignments, how you can reverse the positions, clear any Reg T or margin requirements that you have or margin calls. I'm going to show you how to do that in this video and make sure that all of your bots are all set up on Option Alpha as well. Now, the first thing you have to do when you get an email about assignment is you have to freak out. And I'm talking like go crazy, freak out, scream, run around the house, everything. No, of course not. Don't freak out. I see too many traders out there completely, absolutely lose their mind when they get emails like the one I have here. And I'll show you all the emails I got from tastytrade. And the first thing is you don't have to freak out, particularly if you are trading spread positions, which I'm trading spread positions inside of Option Alpha. And that's because these positions are covered by the long legs that you have in many cases when you're assigned. I'll show you how that all works. We'll walk through all the numbers here, but the first thing you should do is just don't freak out. Just make sure you take this one step at a time. I'm going to show you how I do it here inside this video. I hope this helps out. If it does, please share it with a friend or a trading buddy or suggest it to somebody who is freaking out right now about an assignment or how to deal with it or a margin call or whatever. All these things sound really scary, but they're actually not. They're totally manageable. I'm going to show you how to do it here. So first thing is I did get this email. This was the first email that I got from tastytrade, which was saying that my account has been assigned these following positions. Now, truth be told, I do not have for this particular Tasty bot running that I have right now. I don't have any additional monitor automations that are checking for assignment risk. Clearly, I should add that now. But obviously, these positions were very close to expiration. We're in the money. And with the sell-off yesterday at the market close, these positions got assigned. So I got assigned these two positions, which are the FXI. I got 3 of the 26 short puts. And then for EEM, I got 2 of the 40 strike short puts. That means I'm long shares in FXI and I'm long shares in EEM as well. Now, the other thing I got shortly after that was I got this Reg T call for my account as well. And all this basically means is that now that I have shares that were, or my option contract was converted from an option contract, which remember is a leveraged bet on the underlying stock. Now that it's actually converted to the stock and I had to physically buy the shares because I was assigned those contracts, now that's creating an additional margin burden in my account. And because this is a small account that I have with tastytrade, that means it's over the required amount that I even have in cash. Now that's okay, because what that basically means is that, look, if I want to keep this position, and maybe I wanted to keep this position, tastytrade doesn't know what I want to do, right? They're not trying to read my mind. They're just saying, look, you got to sign these shares. Now you have these long shares, which technically you can't cover with the cash in your account right now. So you have to do something. And this is where you basically get this Reg T email that says, look, you have to cover this. You have to either transfer more money to tastytrade or you have to essentially close the positions. So I also got this one here, which is the margin requirement call. So this is the margin or required maintenance call for the account as well. These are all basically saying the same thing. They're just trying to give you as much information as possible. So I applaud them for doing this. And basically they're saying, look, you can cover your margin requirement in these sufficient ways. So one, depositing securities, so you can transfer securities from something else. Market appreciation, so the market could go back up and that could cover it. So the value of these positions could obviously increase if the market rebounds, that could cover it. Or you could close positions to generate sufficient margin release, which is exactly what we're going to do here when the market opens, is we're just simply going to unwind these positions, remove the long stock that we have, sell out of our long put options, which were used for protection, and basically rewind the position and unwind it from our account. That will reduce the margin requirement because now we're not holding long stock. We don't have to have all that cash available to cover that long stock position, so we can remove it in there as well. Now, I did get one additional email from them, and I think this one was a little bit overkill, where it's like, yes, I get it. I understand all these. But this one said, potential excessive risk in this account and action may be required. Now, look, I totally understand why they're doing this, because they're basically CYAing themselves and saying, look, if you don't, trader, whoever you are, right? If you don't take action, we will take action for you to remove the positions. Now, I don't necessarily agree that 30 minutes after the market open is the right call, but that's them. I'm not going to say like they have to do their own risk management protocols. I totally get it. So, but this is basically saying, look, we need to hear from you to see if you're going to address this, or do we need to take action? Basically, if we don't hear from you, then we're going to take action. Now, I emailed them back and basically said, look, I appreciate it. Thank you for the email. I'm perfectly comfortable closing out the shares this morning. Please do not take any action on your part to close these positions, as I will manage them this morning. Now, I haven't heard back from them. I asked them to please confirm. I'm sure I'll hear back from them, but I'm just letting them know, like, hey, I'm fully aware that this happened and also fully comfortable to manage this on my own. I don't need your action. I don't need you guys to close the position for me because I want to do it myself. Okay, so let's actually jump into tastytrade. And so here is a look at the positions that I have in tastytrade. Again, this is pre-market right now. The market's not open just yet, so we'll just wait for the market to open. I'm just kind of walking through this as we get ready for the market open here. But this is the first position. This is the EEM position. This is a really easy one to understand because in this case, what you have right here is you have this position. This is the first one here, which is the EEM position. And this one's really easy to understand because it's only two components. I don't have any other parts of the EEM position. The only thing I was trading in EEM was the short put spread. And so you can actually see here, and it's really small on their screen, but you can see that I now have 200 shares that I've been assigned. So these are the 200 shares right here. And you can see the trade price right here is $40. Now, the reason that the trade price is $40 is because that was the strike price that I was assigned. Remember, I was assigned the short 40 put options for EEM. I had 2 of them, so I'm now long 200 shares at $40. Now, this is really key as we, in a second, get to like totaling and calculating how this is going to work and how we're going to rewind everything. I'm just kind of laying the base groundwork here. Now remember, I still have the long put option, which is the December 39 strike put. So my original position was a short 40 put option and a long 39 put option. And so I still have that long 39 put option, which essentially acts as protection if I need it in case the market goes really, really far down. I have this option that's protection for my account. But if the market goes up and I don't need the option, I don't need to have it in the place anyway. But this is that spread component that kind of covers you in case the market really, really tanks for some of these. You are covered because you have that long put option. Now, in this case, I have the long put option. So as the option buyer for that contract, it's up to me to decide if I want to exercise that contract or if I just want to reverse the trade and close the position. Now, in the case of these positions today, we're going to reverse the trade. We're not going to exercise them. It's the easiest thing to do. You just simply unwind the existing positions. Now, if I go over to my Option Alpha account here, you can see this is the actual EEM short put spread position. Now, remember, no broker sends Option Alpha notifications or API requests or notices or anything that lets us know or lets your bots know that you've been assigned on position. So I wish they did. You can ask them to please start sending those over. But until they do, there's no way for us to know or your bots to know if a contract or a position has been assigned. So right now inside of Option Alpha, everything that it shows right now is basically what it knows, which is that it knows it has this position. Now, this is where you're going to take down some critical information here, not only the trade price of this position here, but the number of contracts that you have so you can kind of match all this stuff up. So that way you can do all of your accounting and make sure that your bots are squared up P&L wise after you're done. Now, the first thing that we're going to do here, once we get everything kind of wrapped up, is we're going to override this position. Now, notice we don't want to close the position because we're going to unwind the position in tastytrade, but by overriding it temporarily, we're essentially just disconnecting Option Alpha from tastytrade for this position only and basically taking over management ourselves of the existing position. So what I've done here is I've started to jot down all the different notes for this position. Now, this is actually the first one that we're going to go through here, which is the EEM position. I just jotted down the notes on the FXI position first, but this is actually the first one that we're going to cover. And here are the notes on this position. I'll kind of walk through these so you can see it. So first thing is I put down a note that I was assigned 2 of the EEM 40 strike puts. And again, you don't have to do this. I'm just walking through how I do it or how you can document it for yourself. It keeps you logical and just how you've making sure you're managing everything. I kind of outline a plan for myself heading into the trading day. So that way I don't have to worry about, freaking out and understanding like, what do I do? How do I manage this? I just like to keep a lot of notes. So I have this position that I was assigned. I go in here and I can see that the original position was a $1 wide 40.39 put spread. I can see that right here, actually. I have a short put spread. It's only $1 wide. I know my max loss is $120 based on when I got into the contract and the width of the strikes and how many contracts I got into. So I know all of those critical ingredients, if you will, those critical data points before I go in and override the position. So I know that I had a trade price of $40. Again, I get that right from here. That's going to help out as we start to calculate our total P&L on the position. And I know again that I was assigned the 40 strikes, which means that I am long 200 shares at $40. Now again, I've already showed you that we're long 200 shares here at $40 for EEM. Those are these shares. And the trade price right here is $40, okay? So now what we want to do is we want to go through our actual plan for this position. Now here is the actual plan. The plan of attack when the market opens is to do two things. One, we're going to, let me just move this over so we can talk through this together. The first thing that we're going to do is we're going to sell our long shares, right? Now we don't want the long shares, so we are long 200 shares. We're just going to reverse that trade and sell those shares. Now, those shares are exactly what's causing our maintenance requirement, our margin call, our Reg T call. All of that is because we have long shares that we don't have enough capital to hold. So tastytrade is saying, look, you either transfer capital to hold it or you sell out of the position. In our case, we're first going to sell the long shares. That's the first component. The second thing that we're going to do is we are going to sell out of our long 39 put. Now we have a 39 strike put that has some value left in it. I don't know what the value is going to be when the market opens up, obviously, but right now, kind of pre-market or yesterday as it was trading around, it's got about 29 or 28 to $35. That's the bid-ask spread. So I'm sure it'll be different when the market opens up. But whenever the market opens up, if there's any value left in this put option, we're going to sell that put option and capture that value. That value will help offset anything that we might have gained or lost on the sale of the shares themselves. So it's basically a two-step approach. You're going to unwind the long shares that you have, and then you're going to unwind the long strike put option that you have at 39. So that is the plan. Now, once we do that, we'll go through the net P&L. I'll show you how to calculate that so you know what's going on there. Okay, so that's just one of the positions that we had. You can basically replicate everything that we're talking about for the other position. So let me go through that really quickly so you see. So the other position that we got assigned here is the FXI short put spread. This one, I had 3 different contracts. So let me just move my notes over here and we'll go through this together. I got assigned 3 of the 26 puts. You can see that I had a $1 wide spread, which was the 26.25. This one had a max loss on all contracts of $162 because I was trading 3 contracts, dollar wide spread, subtract out the credit that I received. Notice here that the trade price of each contract was $46. That's going to be really key later on when we start totaling up the P&L. So we need to make sure we know that and document that someplace or just remember it as you're going through it. And remember, we were assigned the 26 strikes, which means that I am now long 300 shares at $26. Now, we jump back over to tastytrade, we'll collapse EEM, we'll open up FXI, and you can see that this is the actual position here in FXI. Now this one is a little bit different to see because we have another position here. This is another set of positions in FXI. Those aren't positions right now that we're worried about. Those are different ones that are being managed inside of the bot differently. The only one that we really care about right now is this combination here, which is the 3 long 25 put options that have a lot of value still left in them, right? So we're going to capture this value. And then you have the long 300 shares and the trade price is $26. See how we just kind of like see how everything kind of flows over? Now the same thing is going to happen here for this particular position in FXI. So what I'm going to do in FXI is I'm going to have the same exact plan, which is first sell the long shares. Again, these long shares are exactly what is causing this account to have that margin requirement and the margin call. It's basically tastytrade saying, look, transfer money or close the position. Yes, we're going to close the position. We're going to sell out of the long shares. And then step 2 is we are going to sell our long 25 strike put, which has some value left in it. And so that, again, is going to help us recoup some of the credit and some of the premium to make sure that our P&L gets squared up on the position overall. Now, if you actually look at some of these positions like FXI this morning, you can see it's trading pre-market a little bit higher than it closed yesterday. EEM, on the other hand, is trading significantly higher than where it closed. Yesterday, it closed out here down in the below 39 region, which again, probably is part of the reason why I got assigned, a little bit early. But then today it's trading up at 39.37. So this is one of those cases where, and I see this all the time, where people are like, oh, it's the worst thing in the world. But it's actually not the worst thing in the world in this case for the EEM position, because even though we got assigned long shares, the long shares are kind of popping early here in the morning, okay? All right, so again, our entire plan moving forward, and we'll just let the market open here in a little bit, is to do basically 4 trades. You can potentially wrap them up into sets of 2 trades. So you can do one combined trade here to get rid of this position and one combined trade here to get rid of this position. It really depends on how you want to do it. You can do it 2 different ways. One, you can close each of these independently. So you can do a trade just to remove the shares and then a trade just to remove the contract itself. Same thing here. You can close this one independently and then close this one independently. That would be 4 total trades that you would do, and you would just be doing them in bits and pieces. Or you can combine them into a covered order, and the covered order is just an order type that combines the shares and the actual put contract into one order and one price. It really doesn't matter. Ultimately, you're going to get to probably about the same P&L. You might have a little bit difference in slippage one way or the other, but it really doesn't matter either way. It's just a personal preference of how you want to do it. So in our case today, what I'm going to do is I'm going to do the longer route, if you will, just for documentation purposes for you all, since we've talked about our plan. And I'm going to go ahead and do the plan right here, which is to do all 4 trades, basically piece by piece. Now, I am going to start with, let's say, FXI. We're going to go ahead and take care of that one. Then we're going to take care of EEM, and we're going to kind of work down this list. Now, again, I don't care how you do it. You can do it however you want, but I like to kind of document a little bit of a plan for myself. Sometimes I won't take all of these copious notes. I kind of took more notes than needed for this video to show you guys, but I hope that this really helps kind of walk through the process of doing it. And notice I'm doing it before the market opens, so I'm not worried about markets moving or whatever. I can take care of these positions right after the market opens and then make sure that we take care of our bots as well, okay? So in preparation of doing that, I'm also going to go into my bot here and I'm going to override the FXI position. And basically this is telling you that you're going to take over the management. It's going to be disconnected from the bot. Then we'll come back in once we've reversed the positions and correct the P&L, make sure we're all squared away on this bot. So I'm going to say, yes, I want to override this position. So that one's now out, and I'm going to go here to EEM. I'm also going to override this position. That position is now out of my list, but you can see they still show down here in the bottom. Just refresh here, and you can see these positions. There you go. These are your overridden positions, which are right here. Again, we can still have all the information in here about the trade price, and the contracts are down here. You can see the number of contracts for each. And so what we're going to do once we reverse all these positions is we'll come in here and we will edit them to a close status, and we'll just total up everything for the closing prices for each of those, so we know exactly what we are going to total up and what we have for each position, okay? So that's all we're going to do. So let's just wait for the market open, then we'll start tackling this. Okay, so the market's open now. So like I said, what we're going to do is we're going to go through our basic process here. We're going to close out of FXI, then we're going to close out of EEM. Then after all of the closing is done, then we'll go back through and total up everything here together, okay? So market's open now, and like I said, EEM is actually up a little bit. FXI is definitely up on the day, but we'll see where it goes. So first thing I'm going to do here is I'm going to click on the shares of FXI, go down to Actions, and close the position. I'm going to close those shares. Mid price is about 23.43, which is fine. Actually, it's gone up to 23.46, so that's fine. We'll review and submit that order. And you can see that we got filled on that position. So that position is now done for the day. You can see the shares here that we got filled. Actually, we can just go in here. You can see the notification. We got filled at 23.46. Oh no, I submitted at 23.46 and we got filled at 23.47. So we actually got filled just slightly better on that one. So let's go in here and let's go back to FXI now. Now again, now part 2 here is that we've already sold the shares, so that's done. And now we're going to go in and we're going to sell the long 25 put option that we still have. Now that still has some value. and that's these contracts right here. They still have some value, even though we're getting close to expiration, starting to lose some of that extrinsic value. We're going to go to close position, and then we're going to go down to full. Now the bid-ask spread here is a little bit wide. It's about 140 to 187. So we're going to close here right around 163. So we'll try to put in a limit order about 163, 162, and we'll go ahead and review and send. Should be able to get filled on that position rather quickly. And we'll just leave it in here. This is a working position here, you can see. And hopefully we get filled on that position. So while that's working, we're going to go over to EEM and we're going to unwind that position as well. Now EEM is up big time today. This morning it's up to 39.50, which is actually really good for our position. So first thing we're going to do, like I said, is close out of the shares. So we're going to go ahead and close this position. We're going to close out of the shares. We're going to try for 39.50 on those shares and sell those shares for 39.50. We'll see if we can grab that. I think it's trading like literally a penny right below that. So we'll let that position work for a little bit. The 39.50. Oh, it's right there. It's like literally 1 penny below our price. So hopefully we get filled here on that position here soon. Let the market kind of move around for a half a second and try to get that position off. The other thing that we're going to do is we're going to sell out of our put option. So while that's in there and moving around, we're going to go ahead and sell out of our put option. This one, because it's the 39 and the market's trading higher now than 39, it doesn't have that much value, but we're going to go ahead and just remove the position anyway. So we're going to go ahead and close this. We're going to close the full contracts here. It's like 5 or 6 cents. It's really not worth too much, but we're going to go ahead and close the position anyway and sell out of those positions. Oh, we actually get a margin account here issued because we are failing to meet our margin requirement for this position. And that's because we don't want to have these additional contracts that are uncovered. So what we actually have to do in this case, it looks like, is remove the share position first, and then we can remove the actual contracts themselves. So we'll go here to working orders, and this is that EEM order that we have here. Oh, and that actually just got filled. So while I was in there trying to remove the position, it actually just got filled, which is great. So if I go over here to my email notifications, you can see I did get filled at 39.50. That's awesome because now I can actually go ahead and close out of the option contract here. So again, the reason that that happened was because basically tastytrade said, look, you can't even cover this position. You got to sell out of the shares first. That's fine. So now we're going to sell out of the remaining contract that we have here. We're going to close that position. Again, we'll just do this for, like, let's say a 5-cent credit or so, just to try to remove it for something that got filled almost immediately. So we are now officially totally out of the EEM position. You can go back here and see we got filled on this position. Actually, we received, just one fill here. We sold our 2 contracts for the 39 puts at 5 cents. These are going to be important because as we come back in here and start totaling up our P&Ls and stuff, we want to make sure we have all this information kind of documented in here. Now, the only remaining position that we still have working is this one right here, which we were trying for a limit of 162. Seems like it's kind of moved around a little bit on us. So I'll unlock the limit. We'll go down to about a 36. We'll try that. See if we can get this position off. There we go. And the position is now off. So we don't have any more working orders. We are 100% out of both of these assignments. Again, if you go back here to our email confirmations, you can see here that we sold our 3 contracts at 146. So not as good as we wanted for those particular contracts, but again, we're totally out of the position. So the combination of the FXI shares and the FXI contract here, that basically does what we wanted to do for this part of the plan, which is the long shares to be sold back, and we sold out of our long put option. Now the next part, again, which we already did, was the EEM position. We sold out of our long shares, and then we sold back our 39 strike put option. So at this point, we're basically clear. Our margin requirement is back up. We're good to go. We should have cleared everything. I don't know if we'll get another email from tastytrade just to let them know, or to let me know that the margin requirement is back up, but we should be clear now because we don't have those long shares, which we're holding on to, and we've removed the position completely. There's no other restrictions basically on the account moving forward, okay? So now what we want to do is we want to total up the P&L for these positions, because now that we have these positions basically closed out of, we want to make sure that our bots are corrected for P&L and margin and all the stuff that we want to keep our stats accurate inside of Option Alpha. If you care about that, which I do, then you want to make sure that you correct these moving forward. So here's how you're going to do it. So inside of your particular bot here, we'll just start with the EEM position because that's the first one I clicked on. We're going to go up here to edit, and instead of override, we're going to go here to closed. And when you go to the closed status, you're going to have to put in, because you were in control of this, right? You were overriding the position, so the bot doesn't know what you closed the position for or all the combinations of pieces. You want to go in here and you want to put in a closing price. Now, this closing price is going to be the closing cost of all the combinations of things that you just did, including the shares that you were assigned. And that's the really key point. So I want to walk through this with you so you understand how to calculate it. It's actually not too hard, not too complicated, but we want to make sure that we do this here together. So first thing that we're going to do, we're going to bring up our notepad here so you can see this. And again, we're focusing on the EEM position here. And then I'm going to bring up my calculator and put in all the information here. So here's how it works out. And we'll just go back and forth on this, and hopefully this really helps out with you. The first thing that you're going to do for closing price is you are going to subtract. So you're going to start by subtracting the strike that you were assigned. In this case, it was the 40 strike that we were assigned in EEM. So we were assigned the 40 strike in EEM. So we're going to subtract the 40 strike. And the reason we're subtracting is because it cost us money to buy the shares that we were assigned. Now we'll total in all the credits and stuff like that as we go, but the first thing you do to start is you have to factor in the assignment. In this case, if you were assigned short puts, you have to subtract the strike that you were assigned, basically the trade price of those puts. If you later were assigned short calls, you basically add the strike of the calls because you were assigned short shares, which means you collected premium and you got to buy it back to close the position. But here we're going to start with negative $40, which is our strike of the shares that we were assigned. Now, I'm not going to multiply it by 200. We can do that later on once we get towards the end. So you just want to do it on a per contract basis, which is the easiest way to do it moving forward. And then we can multiply it by 2 at the end, which gives us our total for the different contracts here. Okay, so I'm going to start with negative 40. Now, once I do that, the next thing that I did as part of my plan, you can see right here, was I sold the long shares. Now, when you sell shares, you collect money, and you collected that money, which means that it works for your account. It basically is additional capital that you collected. You bought shares for $40, but then you sold them for X amount. Now, how much did we sell the shares for? So let's go back here to our EEM position. We'll go here to our email. You can see that we sold 200 shares for a magical price of $39.50. So what I'm going to do now is I'm going to go here and I'm going to add $39.50 to my calculator. And the reason I'm adding $39.50 is because I am selling shares and I'm receiving money back. So I add $39.50, which gives me the difference between buying the shares at 40 and selling them at $39.50 is currently negative 0.5. That actually makes a lot of sense. I'm glad we started with this EEM position because it makes a lot of sense. We were assigned shares at 40, which means we had to buy shares at 40. And then we sold shares at $39.50 when the market rebounded this morning. So the difference between those, just for the shares component right now, is negative 0.5. So basically 50 cents is the difference for the shares. But that's not all. So the other part of our basically walkthrough and process that we went through is we also were selling the long put option. Now the 39 long put option wasn't worth much in this case because the shares were rebounding and it's basically very close to expiration, but we did collect a small premium for selling back our long put option. So how much did we collect for that? We collected 5 cents for that particular contract. And that's right here. We sold 2 EEM put options for 5 cents credit. You can even see the credit right here means that we should add this to our calculator. So if I go back to my calculator and I add another 5 cents, I'm going to add 0.05 to this calculator. And now I get this down to negative 0.45. So that negative 0.45, that is your closing price on a per contract basis. Like, so for one contract, 100 lot of shares, right? Now we know that we traded multiple, but in this case, we don't actually need to total that up right this second with the multiple contracts because Option Alpha can do that for you for your reporting if you just put in this total, which is on a per contract basis. So this is the easiest way to do it. you take the shares that you were assigned, you subtract or you add back the shares that you sold, and you add back the credit for the long put option, you get to a 45 closing price for each lot or grouping, if you will, of these contracts. And that is the number that you want to put into your Option Alpha account. So you want to put in here that you closed the position and you closed it for a closing price of 0.45. So that's what you closed the contracts for. And if I hit save there, then you can see that everything gets now totaled up for our total return on this position, our trade price, our closing price, and then the two contracts get totaled here in the total P&L. So everything gets factored in automatically for the number of contracts that you have. Now in this case, remember, this is actually really cool that this happened. Not that I lost 10 bucks on the trade, but it doesn't really matter at this point. What the thing that matters here is that by removing this position and reversing all of this stuff, all of that stuff that you got from tastytrade and that you might get from a broker about Reg T margin requirement, all this risk, it seems really, really scary. And I understand that, but that's why I'm doing this video, because it's not that scary. And in this case, this trade, once I unwound all the components of it and just reverse the trade and reverse the assignment, which is going to happen as a trader, the net result here was that on this trade, I lost 10 bucks, right? And so that's okay. I can deal with that. That's totally manageable and certainly not something that you necessarily have to freak out about. You just have to understand the components that you got assigned and how to unwind those components, which I hope this video is helping doing. So again, in this case, we closed the position for $45 per lot, if you will, and that gives us a total P&L for the two contracts that we traded of $10, okay? So now when you go back in here, you go to refresh your positions, you can see that EEM position now is back from override status into an actual close status. That way your stats and everything are all good to go. Okay, so next one up here is the FXI position. Now again, remember, we overrode it, so we're going to go in here to change it to close status, and we just have to total up everything for FXI. So if I bring back up my notepad here, you can remember and bring back up our calculator. First thing for FXI is we were assigned the 26 strike put. So remember, first thing you got to do to total up your closing price is you subtract the 26 strikes that you were assigned. Why do you subtract them? Because you had to pay $26 for every share that you bought. You bought 300 shares, $26 was the strike price of those. So you subtract 26, you outlaid $26 per share. That's why you subtract it to start. But we add back in now how much we got when we sold the shares back to the market. So in this case, we sold the shares back to the market. Oh, I think I hit something, so I just want to make sure I get this all squared up. So we sold the shares back to the market. How much did we get for selling the shares back to the market? Well, we go over here. We can see that we sold our FXI shares back to the market for $23.47. So that's how much we want to add back to our calculator. We're going to add back in here 23.47, and then we're going to hit equals. So just on the shares right now, we are down $2.53 per share. Now that's not the total, because we also sold back our long put option, which was acting as protection, right? Remember our long put option for FXI, we sold that back, and we sold that back for $1.46 for each of those. So now what we're going to do is we're going to also add back in how much we sold that long put option for, which was 1.46. And so what that gets here is that gets our total net closing price on a per lot basis for each of those, right? Now I know we did 3, and again, Option Alpha will total up the 3 for you inside of your account, but we wanted to get to this point, which is 1.07. That was our closing price. Once we adjusted for our shares that were assigned, selling back those shares, and then selling out of our long 25 put option, which was acting as protection. So we're going to go into our Option Alpha account, and we're going to put in that number, which is 107, and then we're going to hit save. Now in this case, by putting in the 107, you can see that that is the closing price for each and every single one of these contracts here. So the closing price was 107 for those, and our net trade price here was 46. It takes the difference between those two, and then it multiplies it by the 3 contracts here, and you can see that this trade actually lost $183. In this case, it was a little bit more because of the difference between the open and close positions that we had, because I did them as a group or as individual trades versus bundling them together. I might have gotten a little bit closer, but you can see that we totaled up here to the $183, which is still not a big loss at all, a very small loss on the position, and ultimately not something you need to freak out about if you get those emails about margin requirements and excessive risk in your accounts. They all sound really scary, but if you just manage those positions, you'll be good to go on those. So in this case, we lost a little bit more on FXI than we lost on the EM position. EM kind of really rebounded and helped out. But all in all, it was definitely a lot easier to manage these positions once you understand kind of the process of going through it. So again, remember, this is the framework that we used for going through those different positions, just kind of walking through the assignments and the net P&Ls. I showed you how to calculate those. Those are each here, so you can see what those are. But it's not a really hard process. I kind of really explained it here in this video, but I hope it really helps. If it did, let me know in the comments or add a comment, share it with somebody, give us a thumbs up, whatever. I just want you guys to understand that it's not a difficult process if you just walk through it. It's just a couple steps. You can totally manage it yourself, totally get your account back to square one. If you go over and have this margin requirement or Reg T requirement, it's absolutely a manageable thing to do, and you don't need to freak out about it. You just walk through the process of unwinding the position and totaling up everything like I showed you in the video. So if you have any questions, as always, let us know. Until next time, happy trading.